Hey everybody, welcome back to the chart pattern series. In this lesson, we're going to be looking at the symmetrical triangle, which is a bilateral pattern with a downward sloping trend line and an upward sloping trend line that intersects. And this pattern usually has a 60% success rate. Well, all that simply means that the pattern usually reflects a resting period before the stock returns to its previous trend. But because of its low success rate, it tends to be a bilateral pattern, meaning it can be both bearish and bullish. It just depends on which way the stock breaks out. This means if the breakout is in the upwards direction, it tends to be bullish, and vice versa. If the breakout is in the downwards direction, it tends to be bearish. Now, to spot this pattern, you want to find a stock that has made a significant move up or down. For this example, we'll be looking at a stock that has made a significant move up. After you've spotted the uptrend, you then have to wait and watch to see if the stock starts making lower highs and higher lows. Once a stock has made 2 lower highs and 2 higher lows, it can be considered a symmetrical triangle. And like always, the more higher lows and lower highs it makes, the stronger the pattern becomes, and usually the bigger the breakout. Now once you've identified the lower highs and higher lows, you can place a trend line by connecting the first high to the first lower high and extending that trend line out to the right. Then you can connect the other trend line. This one you want to connect the higher low to the second higher low, extending that one out to the right as well. This trend line will act as your support and the other trend line will act as your resistance, and these will be the lines that determine the breakout points. Now like usual, we know the pattern, but we have to look at the volume bar pattern as well. Usually the symmetrical triangle has a descending volume pattern, as the triangle is fully forming, but has high buy or high sell volume on the breakout, just depending on which way it breaks. One thing to note is that a symmetrical triangle with high volume during its formation tends to mean the stock will reverse rather than continue its prevailing trend. So now that we know all of that, let's look into how to enter the pattern. To enter the pattern, you first have to wait for the ticker to break above the downward sloping trend line and have a candle close above it, with that candle usually making a higher high. You also want to see that there is high buy volume on that breakout. This confirms that other traders are seeing this pattern as well and are eager to buy in. After you have your 2 entry requirements, which are again a candle close above the downward trend line and high buy volume on the breakout, you can then place your entry. Usually once the stock breaks the resistance, it will come back down to the breakout point and make that area its support. This is where you want to get your entry. I usually tend to enter on the breakout, then add on the pullback of the breakout. Again, my rule of thumb is to add within a 1% range of the breakout. This usually goes for all triangle patterns that I trade. One thing to note is that a stock will not always pull back to the breakout point of a pattern, and an entry once a candle closes above the trend line can be taken as well. Next up, we have to determine the price target. To do that, you want to measure the move between the first high and the first low. Then you want to take that measured move that we've just found and copy and paste it on the breakout point. This right here gives you your price target. If you want a second price target, just copy and paste that box on top of the first box. Now, to figure out your stop loss, it's really simple. You can either place it under the trend line or a bit under the previous low. And when a stock makes a new lower low, it suggests the trend is changing to the other direction. I like to put my stop loss a bit under the previous low, but not at it. This is because sometimes a stock will hit the previous low, but not go under it, meaning the trend is still intact. Now what we just discussed is how to trade it if the stock is breaking in the upwards direction. But if it's breaking in the downward direction, you want to reverse everything I just said. This just simply means you want to take a short position whenever a candle closes under the bottom upward sloping trend line and has a lot of sell volume accompanied with it. You can also wait for a pullback up to the trend line / breakout point and get an entry there as well. As for your price target, it's placed the exact same way, but your stop loss isn't. The stop loss is placed above the previous high. And there you have it, you know how to fully trade a symmetrical triangle for both bullish and bearish ways. And like always, I placed a recap of everything I talked about on the screen, and I hope you enjoyed that video. I'll see you in the next one.